Hey, what's going on, guys? Welcome back to Q and Learning, and this is a stock analysis on Alibaba. And today, we're going to be going over why Alibaba is currently down 11% on the month and why the COVID variant of Omicron will affect Alibaba's business. So first, going over, Alibaba in this last year, in 2021, they posted a less than expected 29% rise in revenue in the September quarter compared to the year before of 200.7 billion, and it has a potential forecast of 20 to 23% in this following year. And so since then, they dropped roughly from $146, $148 a share down to, I believe, $133 a share this past Friday. And these numbers are really, really solid. And yet, even though these weren't the estimate numbers of, 30, 35%, Alibaba is still slightly trading behind. And I'm just going to be going over why intrinsic value wise or their fair value wise, why Alibaba should be trading at easily $155 to $175 within the very short term. And so, what Bloomberg Intelligence really says, they had slight gains of 18% in the third quarter, and with the increased competition, gross merchandise value below 10%. Basically, just meaning that there's certain sectors aren't growing as much, and with a company like this, Alibaba should be exponentially still growing. And when we go a little bit farther down into the article, we talk about Singles Day in Alibaba, November 11th. It's essentially like China's or Alibaba's, Black Friday of the Chinese market. And typically on their Singles Day, they usually do almost double what they would typically do on a regular Black Friday. Last year, they did roughly 77.8 billion, while for Black Friday, they only put up around 35 billion. And so this is Alibaba compared to the entire US market for Cyber Monday. And so I think Alibaba not posting as solid as growth in that number. We don't really know what Alibaba's numbers are going to be for the next following year, but for them to be posting up another 85 billion just on this year on a single day alone is actually insane, right? Because even though their growth has slowed down a little bit, 85 billion is still roughly 2 times as much as the entire US market is going to have on Black Friday, which is absolutely insane. And so getting into like Alibaba's EPS. So their EPS on the quarter ending in June 30th. So this was updated and done a little bit while ago at $2.50, 3.25% increase year over year. And again, this was just for the single quarter, right? And the entire 12 months, they posted an 8.43, right? Or $8.43 per share. And so we can see that their EPS has been growing roughly 5.7% since 2020, and since 2018, roughly 27%. And so we see that even by the lowest margins, roughly their worst year back in 2016, where they went quarterly growth of minus 77, minus 67%, they still put up $1 to $2.50 per share in EPS. And so now using intrinsic value calculator, and any of you guys can do this just using very fair numbers, EPS per share. Let's say that's only 2.5 for like the next 10 years, next 5 years. And again, this is taking their roughly lowest numbers back in 2016. EPS of 2.5, expected annual growth rate of 15%, even though when in this article, we go back and they say that they put a less than expected 29%, right? So I'm going to take this margin and bring it down to 15%. Let's say Alibaba cuts in half and they're only doing 10% a year in the year 7, year 8, but it's still made up for it in the next following years, like from now. And we have an average of 15% over the next 10 years. Corporate yield bond is 2.6%. This can be just found on an easy Google search. We get the current market price. And we see their intrinsic value or their actual fair value of the company of where it should be right now. Again, there's multiple different types of intrinsic value and whatever, but I really like just like using this calculator because it's really easy to use. We have intrinsic value of $153 a share. And this is again at the EPS of 2.5, numbers that they haven't seen since 2016 when they actually lost year over year quarterly growth of 67%. And this was since they've IPO'd in 2011. But if we even look at the like past 5 years or past 3 years for that matter, they've been averaging conservatively about $5 a share in EPS year over year, right? So if we even just double that, we see their intrinsic value again almost doubles, which makes sense because earnings per share is directly correlated to the actual value of the stock. So I'm just trying to tell you guys, Alibaba, no matter which way you look at it right now, is currently undervalued. And I just want to connect this quickly to some structural levels. Alibaba being down huge right now. I think almost 60% from all-time highs. Buying them at these levels of like 133, I would say it's a definite buy. You have investors like Charlie Munger, Warren Buffett. I like putting my money where smart money is. And currently they've doubled down on Alibaba and they haven't even doubled down yet on this 133 level. I would just watch out for the 130, 125. Anything below that, is just an ultimate buy. I would just wait for the stochastic, this 21-day stochastic, to just get into this 20 to 80 range, and I would say it's a buy right away, at least for the short term. And even for the long term, this is a company that would hold for the next 10 years easily. And I just want to connect this to COVID cases right now. As we can see, COVID cases in just like the past week or so, have hit a little bit of a bump, reaching over 100,000 cases and a 7-day average of almost 100,000. And again, this is only the last 7 days, but I do want to bring up Omicron just because the fact that when COVID hit last year, Alibaba put up really, really solid numbers, especially because they're e-commerce. And the reason why is because with so much online business, just like Amazon, they were able to have such a high EPS. And while this is not essentially sustainable, I do think Alibaba could get a boost from Omicron because the fact that it's spreading so quick. Just about a week and a half ago, we heard that it started spreading out from Africa, from 8 different countries. US put essentially caution to these countries that they couldn't come in. And now we have actual positive COVID Omicron tests that are saying that they're confirmed in Britain, Germany, and Italy. And by just the readings of it, off of a 500-person flight, 61 people got infected. So a huge, really high infection rate. And on top of that, with it already spreading for roughly 2 weeks now, I think it's only just a matter of time that it hits the US and hits other countries like China, Korea, Japan, and these countries around the world. And so I do think with Alibaba having a boost with these Omicron variants will prove to be a really big impact for their business, and this can essentially skyrocket them into 2022, and I think they're poised for a run. That being said, guys, I hope you guys are doing well out there. If you guys have any comments, leave them down below. Make sure to like and subscribe, and I hope you guys have a great rest of your day. Peace.